Good morning, everybody. So it looks like we have a reversal day in the making. It'll be interesting how it unfolds into tomorrow's big options expiration, but it's typical, you know. Things had a nice little run up out of this consolidation. Yesterday was kind of a whippy day. Yeah. So this is how we read slowing momentum, right? It's narrowing ranges, what we saw yesterday, and then it was that range expansion on the news, bit of a whipsaw, but it ended up about in the same area where it started. And now it was a little bit lower, gapping down almost toward the low of yesterday's low. Um, Come off it a little bit, so not too far from yesterday's close. But see a little breakout failure on the hourly chart and the wide range bar starting down. And it was on the news that whatever they're going to raise interest rates. So they're saying it was amazed, to hear, an agreement of, I guess, however many that they're going to have to raise interest rates higher in the next couple of times, whatever. And you have other people coming on the news channels and saying, "Oh no, they're done." And I was like, they're telling you right there in your face what they're going to do. But it's always a moving thing. But anyway, nice run up over a few weeks out of this. Remember, this was 6 weeks of torment, going back and forth at this resistance area. And, we always like to point out the, the concept and living through the concept, meaning, we look at this and say, oh, that's bullish price action, which it is. It came up to resistance and it went sideways at that resistance. Sometimes we call it absorbing supply or transfer of supply, because as demand increases and comes up to a supply area, it's going to do one of two things. It's either going to pull back or it's going to correct through time. And that was a lengthy correction through time, but you can see all the candle bodies were up there and the bottoming tail bars. And it was like, okay, on this one, it's going to go up. And then it was another week. Oh, it's going to go up. And then it didn't. And it's like, oh, I don't know what it's going to do. Small candle body is not going anywhere. And it starts going up. And then another bottoming tail bar and so on. So just pointing out the reality of studying patterns and living through them, and kind of the psychological things that start going on, frustration, and things just won't get going. So anyway, what we see have happened now, and I think I touched on this yesterday, was the fact that the momentum increased from here, meaning it started to break out and we had a nice move higher. So it's exactly what you want to see in an uptrend, that momentum increases, because historically what happens is you get a decrease in momentum at a high. And whether you call that in a M top or a head and shoulders top, we don't know how it's going to form, but the distance between the highs get closer together. So what we would look for possibly is like, okay, this pulls back toward this area. What was resistance becomes support. What was resistance becomes support. Yeah. And then it goes up and it just barely takes out the high. And the distance between the highs are closer together. And those of you that may be still stuck on some indicator-based mythology, it's where you get hung up on, oh, look at the divergence between the indicator. That is so misleading, because depending on your settings, what indicator it is, and of course, momentum can slow down and pick up again. The trend is still up. But I just wanted to point that out. Things are coming up off of the low a little bit. S&Ps, 24-hour, you see the little bit of a red bar. Nice, just came up off of this low point here. As it comes down, look, we're always looking to the left there, right? And looking to, and look at yesterday, right? I got to turn that green. Look at yesterday's prices came down on the news and then reached that prior low. There were buyers down there, and it rallied pretty far up, way up there, and then we're coming back down again. Joe says you're stuck in the price-based reality. Can candle language? Absolutely. We have to get more people there. It's an uphill battle that we've been trying to sway people, for a long time. When I started saying looking to the left, I guess 20 something years ago, give or take, people looked at me. I remember doing these live seminars in hotels, and even the guys that were working for me, they're like, "Oh, here goes Greg again. Look to the left stuff." They thought it was like weird at the time, but they started to get it. And the more you get it, the more you respect it and say, you know what, all of this indicator-based mythology with trend lines and fib lines and so on and so forth and oscillators, it's like, man, why did I have to get hung up on that bullshit? Well, that's what we're all inundated with. When I started this in the late 80s, and I had some rudimentary program, nothing like what there is today, but it was still filled with indicators. And so light bulb moments came shortly before giving up. Yep. All right. So slowing momentum here with the bars, nice strong momentum on the way up. Resistance is further up here. I don't know if it'll get there, but that's where it is. As we look at that, we know the NASDAQ already got there. Let's look at SPX. And I think the downside today is a no-brainer, which you think, oh, it's going to go down. That would be higher risk. Well, buyers don't give it up so quick, even though this could be a reversal day. It could just be up here. The call side is pretty close by. I see Jake's got 4405, which if it does go up, definitely you want to be above the whole number. But 4295, if it comes down in the morning, being below the whole number. And right now, expiring today or tomorrow, the large open interest is at 4,300, which, okay, it's a whole number as well as a large open interest there, and puts and calls, slightly more calls than puts, but that's gonna provide a floor under the market should it come down there. So I think you could probably get away with either one, but this one being further away, I think is more comfortable. Your choice. And weekly chart, this bar still got 2 days to go, but it's a little bit of a range expansion bar. And if it was to close like that, that of course is going to be an important line in the sand in the next week. All right. NASDAQ, we know, is up against the resistance there. We call that it's reached its destination. This is what we call a wide range bar igniting, similar to this one. And while this bar isn't as big as the ones down there, we see these slowing momentum candles, small bodies there. And now, the extension, which creates a little void on the daily chart, but room to pull back relatively significantly without damaging anything. So, while this reversal day appears to be starting, everything still looks pretty darn good as far as a viable pullback. Of course, look, when you have a viable pullback after reaching the destination, the odds are, yes, buyers will step up in this area, but the likelihood of getting significantly above that high or creating a slowing momentum situation increased dramatically. Well, Robert, you're saying maybe buy the dip. It's exactly, buy the dip. Of course, buy the dip in what time frame? So here we're talking about the daily time frame, and this is what we refer to as minor support. That's a pivot. That's major support. That at this time, the 20 MA falls right in between them. So any pullback into here should be buyable. Now, when we do MT lives on retracements, one of the concepts or, in the course is depth of retracement. And so everything we do is common sense. Right? But here's the nonsense. Let's call this the nonsense, right? And I only have this on here, these levels where I measure whether I'm going to call it a reversal of trend, or move it to sideways, the depth. But if I was to put fib lines on here where they're showing whatever they are, 0.382 or whatever, 5 and 0.682 or 1, whatever it is, I forget. And when they say, oh, if it comes down to the 682, maybe that it's retracing too far. Yeah, McFly, no kidding. So look, this is our major support. The deeper it comes down to major support after a run like this, the greater the probability that, you're not going to get back above that high significantly. So we'll see what happens next week, how far it actually pulls back. So, I wouldn't be surprised to see today just kind of flatline. It's on the support level, not do too much, just waiting for the options expiration. Let's touch on our internals. Get this little head and shoulders top and breath. I've seen that happen before, leading a pullback. Sentiment didn't get too extreme. It's just interesting after a run like that. I think that's a good sign intermediate term. VIX, maybe it's finally going to go up a bit. So as the market's made a higher high, the VIX made a higher low. It isn't a downtrend, but with the idea of a pullback, this probably obviously should rise up toward this area here. Russell, little breakout failure. Anytime, and I think I mentioned this yesterday in our commentary, that anytime you get a bar like this where you get a consolidation and the range expands there, you do not want to see it come back down under that bar on a short-term basis. So here, you got a little breakout failure. So in alignment with thinking pullbacks, and this has been the weaker, but what we want to see is that pullback be viable. And ideally, maybe we get that Russell coming up toward this 2000 level on the futures. And, the Dow is up against resistance. We discussed that. Looking to the left, it just made sense with the Dow and the NASDAQ at resistance that there was going to be some increase in selling. Common sense. The transports, could be a wide range bar ending. It's getting close to these pivots, but at least look at the nice move out of that consolidation. So a lot of nice price action occurred over the last 2 weeks to support a bias that the pullback would be viable. And we'll see what happens from there. Interest rates are doing nothing. Just flip-flopping back and forth here. So far, they're just consolidating. Interestingly, the 13-week didn't go up after yesterday's comments. So that's a point of interest, but we'll see what happens in the coming days. Meaning they're saying they're going to raise interest rates, but the market is saying, I'm not so sure. So we'll see if this goes up next week after the expiration. And here is a fly in the bullish case. I'm interested to see what this does as we go into next week. Bitcoin has been grinding its way down here, and it formed that 180 reversal with a wide range bars, and it couldn't continue up. And now it's breaking down and it's got a void below. And there is some correlation. It's kind of disconnected a bit between Bitcoin and the markets, where the market's gone up and this has been grinding down. But if this starts to drop, I think that it should happen. I guess the market's going to pull back, but it's got a lot of room to fall. And so that's a bit of a concern. And it should be, if you're long this, if you got long in here, you might want to think about doing something, because that is certainly bearish. And Alex is sharing almost a 66% probability of a 25-point rise in July. Well, that makes sense after what they said, of course, and they got a whole month to digest whatever's going to happen. So I think that's it. These kind of days where you get a turn day, they tend to be the most difficult to trade intraday, because buyers don't give it up so easy. And I'm just letting you know that I've seen these kind of days where you say or believe this could be the reversal day, and it can whipsaw you pretty damn good, because it's just not that evident. It's not evident yet, but just whips around. So a little heads up, a little, as to that. Don't get too bearish here too quickly. And I think more call spreads will unfold today and into tomorrow. All yours, Dan.
Good morning. Well, I like the fact that this potential turn day is happening possibly the day after the Fed meeting, because folks in the green room know that I kind of, based on history, whatever crazy moves you get on Fed day, many times they're just not confident. And it's like people go to sleep and they watch the news, they digest stuff. And so typically I like waiting till 10:30. So if we bobble around here and then take out the 1 hour low, then yeah, I think we can start day trade shorting at least, and look for a lot of call spreads. All right, Bitcoin, you talked about. Yeah, I mentioned that descending triangle breakdown yesterday. So I looked at a couple of these stocks. This Riot, we can do a 10.5 call spread. A little gap breakdown here. I posted DPZ. Got an upgrade, bottoming pattern. Just total another catch-up type bottoming pattern that we've been trading a lot of lately. In addition, our ETF trader trading the broader market indices like IYT. We were in Jets, just sold that yesterday. We were in bots. Look, so we got all these runs, but for new trades, we're still in SPY G, which is the S&P 500 growth kind of thing. We're still in that's full position. What else of interest here? Earnings trades. No, NICE is not earnings. Len was. Here we go. This is earnings. This is exactly what I said yesterday in the green room. If we get a red bar ignored breakout, daily, weekly, monthly, 100% retracement going sideways, up a little bit. So let's watch that on a pullback. I will put that in a window. Oh, Tesla. Yesterday, MT Live, we've been talking about Climos and M and W reversals. So I would not do a call spread on this for next week, but it's gapping under these two lows or right there, whatever, it's gapping right to it. So I'm comfortable with a call spread for tomorrow. We do the 265s. We'll see where the credit is. All right, Lynn. So these are earnings here too. $2 stock doing nothing, no interest. Hexo. This is an over-the-counter marijuana stock. That's why it's 4 decimal places. That just looks like it's going to zero unless they get bought out. That is just horrible. I don't know what the news was here and here. That would have been interesting. It looked like they might have had a lifeline or short squeeze or whatever. Kroger sell setup was up, now down 45.35. The gap's too big. It's a mess. I don't know what to do with that. Jabil. This was one, the green room knows things where you get crazy moves into earnings. My go-to playbook is to short out of the money credit spreads, fading that move. So we were talking in the green room yesterday. I forget how much it was. I think it was like $1 to sell the 110 calls. I didn't do any myself, but that would have worked beautifully. Wiley, I don't see many prints here, but it looks like a gap breakdown. CGNT extended, slopping around, no interest. JG looks like it's going to zero. ICE, I can't see where I don't see any prints, but this will be an ideal 1, 2, 3 if we get an inside bar here for tomorrow, or 2 inside bars. DPZ we talked about. Now COF is a potential start of an M top with what we call new high plus instead of a new low plus on a W bottom. So let's keep an eye on that for a call spread. From Sophie, yesterday's class, you all. Is this a climactic sell setup far from the 20? You better believe it. You better believe it. Now it's gapping down, 30-minute low, or put it in a window. That is a good short idea. I'm going to put that in a window. Sophie. Kava is a new IPO coming out today. Look at this thing was in a death trend. What's interesting? Look at yesterday's volume. That was a heads up to something. Oh, hey, Greg. Got you here. So look at, somebody knew something, a lot of volume there in a little range expansion green bar. Now it's gapping up. Let's keep an eye on that. BitNile Metaverse, whatever the heck that is. Stavros, AMET, gapping down 162, gapping down here. Avoid 156. Yes, it does for day trading. But this is a 180 power reversal. So I don't think it's going to go all the way down there. This move was too powerful, but put it in a 5-minute window, and then, that's gapping trades. We have a bias based on the gap, and then we put it in a window and see if in the first 30 minutes, it matches and gives a pattern to enter. So this is the disaster du jour of the day, a bio. And this is exactly why we give warnings. We don't trade bios much at all. It's only if they have a beautiful pattern, then we might give it with a disclaimer. So that's exhibit A of the danger. trading bios. Our regional banks, big old bottoming pattern. You know, banks were down yesterday with the Fed talk. But I'm going to set an alarm here, 4260. Because if this takes out yesterday's high, then we have a red bar ignored breakout. But I always set my alarms early. So 4260, just right over this 15-minute breakdown area is where that number came from. Right, we talked about retail. They had some retail numbers this morning. I had some jobless numbers. And yeah, the ECB raised rates quarter point. BITI, so this is the inverse ETF short of Bitcoin. I saw this gapping up today, obviously, and that's what made me start looking at those other stocks. This is just leftover from yesterday. Baba could play catch up with Baidu's been on the run. All right, so this was a beautiful. This is a close enough to a double bottom, new low plus, bullish bar after new low, 100% retracement, FIMO on the weekly. I was really hoping that we'd get a 1, 2, 3 for a directional for tomorrow, but look at pre-market here, and it's just slowly churning up. So that's a day trade idea on a pullback and a put spread idea. And KMX, it's going to take some time to set up, but it's bullish daily, weekly, monthly. Sam Adams Beer Company, big old bottoming pattern. I'm going to keep an eye on this for an out of the money short put, but typically they're very spreading. Bravo Juliet, potential, big old double bottom. So I think I have an alarm already. Let me set it again. 62.45. Abbott was a big old double bottom that today's Thursday that we entered on Tuesday. We bought calls and we just sold them into strength yesterday. I think we made 63% return just in overnight long calls. But I'm going to keep an eye on this because if it can chug around in here and maybe pull back another day or two and then give me a reversal bar, that looks really good if it does what I want. This was on our gap list yesterday as a shock pattern, and I stopped watching it. But that was quite the shock, gapping right over resistance. Love those patterns for the price void. It's just, you know, a little difficult to get on board. SOUN is one of these AI stocks. It's in a trading range, but it's worth watching. All right, Tesla here gave up. It had a little 180 pre-market. So that's valuable information pre-market, but I mentioned a call spread, so let's keep an eye on that. I see Len pulling in. All right, Riot is 24 right now. So let's see. I wanted for the credits, I said I wanted 28. So one little pop on Riot, we should get filled. But look, that's a bullish gap over a red bar. This, let's see, this as long as it doesn't retrace too deeply, and I define too deeply as this horizontal line. So, you know, depth just low 117s and somewhere in here. Then it could be a put spread candidate for tomorrow. Nothing to do right now. Nike was on our list yesterday. That we did a put spread, another kind of pseudo double bottom. We got a lot of great favorable comments from yesterday's MT Live. I mean, we do all the time, but people just said they learned so much from our discussion of climos, of potent turns, of fear and greed, fading it, double bottoms. All right, this Sophie, I'm